Hi, this is Brian J. Decker with a quick market update. Want to let you know that right now, as of the date of this recording, the markets are at record highs. Not only are they record highs on a point scale, but record highs as far as market valuation. There was an interesting article this week from John Hussman that talks about with 5 different valuations: price to earnings, price to book, price to GDP, price to sales, and one other that I can't remember, where historically we've never had a higher valued market than the S&P 500 right now today. So higher than 1929, higher than 1999. In 1929, it took 18 years to get your money back if you invested at the peak. In 1999, it took 14 years. So if you're retired, you've got to have a plan to protect your assets. So what we use at Decker Retirement is the two-sided strategy. I don't have time to go into that, but I wanted to tell you that you've got to have a plan to protect you when the markets go down. There's 3 reasons that markets go up: higher earnings, lower interest rates, and the Fed. Well, the Fed announced this week that they're going to keep interest rates low for the next at least 4 years. Smart on their part. When you owe $30 trillion, don't raise interest rates. So with interest rates this low, it hurts retirees because your safe money is not earning much. So there's got to be options, and there are options available for you to protect the downside of your risk portfolio in the stock market and to get a higher return on principal guaranteed accounts. It's interesting, we monitor the insiders of companies and what they're doing. And there is a major exodus, unlike we haven't seen anything since Moses, as far as the people inside the companies selling their shares and getting out, with one exception. It's interesting, it's biotech. The biotech investors are staying in and buying, but virtually everyone else is selling insider shares of their company. So be aware, be thinking about downside protection in your stock portfolio. Try to get a better rate on your principal guaranteed accounts. And we're watching the Fed very closely because I mentioned 3 reasons for the markets to go up. Higher earnings, those stopped about 18 months ago. Earnings are not supporting this market. Lower interest rates, they're almost at 0. That's not supporting. It is the Fed. The Fed alone is supporting this market, with the exception of 2 little tweaks. One is the announcement of stimulus. That's causing a boost. And the second is the vaccine. But that dog has already hunted because that announcement's already been made. So after the announcement on stimulus, we'll see where this market goes, because it'll be 100% on the back of the Federal Reserve Bank of the United States. So this is Brian J. Decker signing off with a quick market update.